Let's break it down. Things have gotten wild again in global markets. In just a few days, we've seen three big moves. Trump ordering a naval squeeze on Venezuela's oil, China quietly preparing a major currency shift, and Germany's industrial heart starting to crack with Volkswagen shutting a plant at home for the first time ever. Put together, they tell us who really has power in the world economy right now. I'm Imran, a Middle East-based analyst who follows energy, economics, and geopolitics. In the next few minutes, I'll walk you through what's happening with Venezuela's blockade, China's Yuan, and Germany's auto industry, and what it all means for the rest of us. And as always, if you like clear, simple breakdowns like this, please subscribe and hit like so you don't miss the next one. First, Trump's limited blockade that doesn't feel limited at all. Trump has ordered a crackdown on all oil tankers that are under US sanctions and going in or out of Venezuela. In simple English, if a ship is on Washington's blacklist and touches Venezuelan crude, the US Navy and Coast Guard now claim the right to stop it, board it, or even seize the cargo. This comes right after a dramatic operation where US forces seized a tanker carrying close to 2 million barrels of Venezuelan oil. That was already a big warning shot. Now more than 30 sanctioned tankers are reportedly sitting near Venezuelan waters, afraid to move because they could be next. For Venezuela, this is brutal. Oil is their lifeline. If buyers know their shipments can be grabbed at sea, they demand huge discounts to take the risk. That means less money for Caracas, more financial stress, and more pressure on Maduro's government. This is classic gunboat diplomacy. Use the navy to squeeze an economy without formally declaring war. But the real message is bigger than Venezuela. It's aimed at Iran, Russia, and anyone using so-called shadow fleets to move sanctioned oil. The US is basically saying we're willing to put warships on these routes and treat the sea lanes themselves as leverage. That scares traders, not because of Venezuela's tiny share of global supply, but because of what happens if this tactic quietly spreads to other countries. Quick pause here. If connecting these dots between warships, sanctions, and markets helps you, double-check that you're subscribed. A lot of you watch regularly but aren't subscribed yet, and it really helps the channel grow. Second, while Washington plays with ships, Beijing is playing with the currency switch. For years, China kept its currency, the yuan or renminbi, weaker than many economists thought fair. That made Chinese exports cheaper and helped absorb US and European tariffs. Now some big banks say the yuan is roughly a quarter undervalued on trade-weighted measures, and they're openly talking about a gradual appreciation over the next few years. Why would China let its currency climb? Because the situation has changed. China runs a huge trade surplus, but it also wants to boost domestic consumption and attract more foreign capital into its stock and bond markets. A stronger yuan makes imports cheaper for Chinese households, and it makes Chinese assets more attractive to global investors looking for returns outside the US. For Trump and for the US financial system, that's a problem. The American economy is already slowing, unemployment is up, and markets are betting on more interest rate cuts and a weaker dollar. The last thing Washington wants is big pools of money deciding, you know what? Maybe Chinese bonds and a rising yuan look safer than US assets right now. So, on one side, you have the US trying to control oil flows with its navy. On the other side, you have China quietly preparing a move that could pull money and influence away from the dollar system. Third, all of this is happening while Germany's old industrial model is under real stress. Volkswagen, the symbol of German manufacturing, has just built its last car at the transparent factory in Dresden. For the first time in its 88-year history, VW is ending vehicle production at a plant inside Germany and turning the site into an innovation campus instead. This is about more than one factory. VW is facing weaker demand in Europe, fiercer competition from cheaper Chinese electric cars, and new US tariffs that make exporting to America less profitable. At the same time, high energy costs in Germany and the messy stop-start transition to electric vehicles are squeezing its cash flow. The company has tens of billions of euros earmarked for investment, but far less than it once planned. It is cutting tens of thousands of jobs by 2030 and pausing or slowing production at other EV plants as well. For decades, German auto jobs felt untouchable. Now we're seeing that even flagship plants on home soil can be sacrificed when the math stops working. So let's break it down one last time. Trump's blockade shows the US is ready to weaponize shipping lanes and sanctions, not just financial rules. China's potential currency shift shows Beijing is happy to use the value of the yuan as a strategic tool to pull in capital and strengthen its own demand. And Volkswagen's shutdown in Dresden is a warning sign that Europe's industrial backbone is weakening in a world of expensive energy and brutal competition. The big picture is simple. Power is shifting. It's shifting on the seas, in the currency markets, and on the factory floor. And the countries that can combine energy, finance, and industry will shape the next decade. I'm Imran, this is Imran Breaks It Down. If you found this helpful, please subscribe, like the video, and share it with a friend who follows oil, China, or Europe. Tell me in the comments which of these three moves worries you the most: the blockade, the currency shift, or Germany's industrial slide. We'll keep breaking it down together.